Amortization. Okay, so it's almost impossible to say or spell, but the concept is almost easier than the word. Amortization comes from an old French phrase that basically meant to extinguish a debt, and that's what amortization describes, the method by which you pay off your debt. More specifically in this video, we're going to be talking about mortgages, but amortization applies on other loan types, like car loans as well. We have a separate video on how interest works, which we'll link at the end, but the amount you pay in interest is based on the whole balance of the loan. This means that in the beginning of your loan, the amount you owe in interest each month is dramatically higher than the amount you will owe at the end. If you paid exactly 1/360th of your principal, and the full interest that is due, your payments at the beginning of the loan would be very high. For example, a $200,000 loan with a 4% interest rate that's being paid over 30 years would have a first payment, just in principal and interest, of about $1,220. Amortization helps to fix this, and with a normal amortization, the same loan would have a monthly payment of about $950. As a borrower, one of the easiest ways to understand amortization is to look at the amortization schedule included in your mortgage. Not only is amortization schedule an insane number of syllables for 2 words, it's also a useful breakdown of each mortgage payment for the whole term, and where that money is going. The reason you pay the same amount per month on month 1 as month 360 in your mortgage is because of the way amortization helps to spread that payment out. In the beginning of paying off a mortgage, most of your monthly payment goes to the interest, with only a small amount paying down the principal. This is to keep your monthly payments lower. As your principal pays down a little each month, you will pay slightly less in interest and slightly more in principal, and that pattern will keep going throughout the loan. In the end, you'll be paying the same payment each month, but almost none of it will be interest because so little will remain on the loan. Amortization is a bit of a complex subject, but it's worthwhile to understand this process because a lot of borrowers don't understand why their principal seems to pay down slowly at first. If you have any questions about amortization, please leave them in the comments below or email us directly so we can find a mortgage expert in your area to answer any questions you may have. Also, make sure to like and subscribe to keep getting our weekly educational videos. Thanks for watching.